Good morning, everyone. Welcome to our Friday morning trading session. Seems like the market's off to a bit of a quiet start here this morning. This is the NASDAQ, of course, that I'm watching on this monitor. I'm also following crude oil and soybeans, although we'll probably spend most of our focusing here on the NASDAQ market. Quick overview for those of you new to the trading room this morning. Welcome. I hope that you'll feel free to ask questions or request markets or anything that you may need help with. Top left here is the Hawk Scalper. Top right is the Falcon Swing Trader. Bottom left is the Eagle Trend Trader, and the bottom right is the Raptor. Hopefully we'll have a slightly more active day than what we saw yesterday. Yesterday did eventually put in a little bit of a rally toward the end of our morning and a slight rally through the remainder of the afternoon. Never did fill that gap from yesterday, and there's no gap open today, so that makes me wonder whether or not traders are going to try to get into that gap, which, where was it? It was sitting around the 48.50-ish area, so we've still got a 25-point gap below the market. If I get a sell signal, I'll certainly give it a go. In fact, we may have one here on the Raptor. Yeah, we could see this as a double pullback signal if we wanted. What time is it? Oh, we're only 2 minutes into the session. And we did get a second push on this one. Let's see if it pushes back one more time. And what I mean is just this second bar, so I can get a second push entry on the bar. We've had our cloud crossover. In fact, you could even see this as a double pullback into the band. This is very, very aggressive. Here you can see yesterday's lows right nearby. This is a total crapshoot, this trade, even though it is a high probability signal per se. You can see from the market structure itself, from the market context, that we may well just end up going sideways still. And of course, it's still early. All right, so that seems to be the limit of the sellers right now, the low of that bar. All right, they brought me in. Looks like they slipped me a couple of ticks, or a tick. I'll throw my stops back a ways above the swing high, try to give this trade a little bit of room. In fact, I may hold it a little bit deeper still. Best place to hold your stop would be above these highs, and I may end up holding them above there because that is where the trading range was yesterday. Oops. So a little bit of a reaction here now. And that's to be anticipated as the market trades back toward these lows. If we can see them break the lows here, if we can see a break of the 48.75 area, I think we could be in pretty good shape. producing comparable signals. Here's a first micro-macro cross now on the Hawk. Don't have a complete trend change signal on the Falcon yet. And you can see we're sitting on the primary support line, which is probably lending to the market's inability to head lower. Russell saying, is that a rule of three we have in the Eagle? Yes, it is, as a matter of fact, Russell. So we've got an obvious trend, right? The rule of three is a counter trend signal. So before we have a counter trend, we need to have a trend. The rule of three develops when we have in this case, an uptrend, and we're producing sell signals against the band. Typically, after the third signal, the market will begin to head lower. It's very important with a rule of three that you have a retest of the high before the last of the three signals. Now, typically, it unfolds, it looks like here we had two retests. We had this one, then we had this one, and then we have the rule of three signals. Typically, however, we get that retest somewhere between the second and third signal before the market starts to head lower. But no, you're right, it is a rule of three signal, which would also tend to confirm what we're seeing across the chart. So here we are now near yesterday's low, or at least the low of the afternoon. $6.30, yesterday's low, actually printing right here. Well, it is in the close enough, isn't it? It's pretty much in the same neighborhood. This was the low of the afternoon, and this was the low of the morning. Effectively the same support zone. When you're looking at a chart, try not to be too specific. You know, the numbers are not necessarily going to fall exactly on the same price. This is not the type of activity where it pays to split hairs. You know, you're not a machinist where you're trying to get everything down to 1,000th of an inch. Interesting that Trade Forecaster says we're in trend mode for 215 minutes. Wow. So what's that? A little more than 3 hours? 3 hours, 20 minutes, 25 minutes. We'll see how that plays out. Yes, absolutely. Russell's asking, the rule of three is also a trend change signal, is it not? Yes, absolutely it is. In fact, if you see a rule of three like this and you're not entirely sure, you can wait for the trend change signal to follow. Now, you could interpret this as a trend change signal because your band is already flipped over, and I wouldn't argue with you. Typically, the trend change signal looks a little bit more like this. It's a little bit more obvious. The trend, the band is already developed a little more. And then you get your trend change. But they do seem to be dragging their heels a little bit this morning. A little bit of a continuation from yesterday. The Geiger counter pulled hard over here to the short side. Did you notice that? The dial was just pulled hard over and stuck there for a good 4 or 5 seconds. It was almost as though it wasn't going to let go. That shows us a lot of sell pressure. Okay, Lorna's got a question here about the eagle. Lorna asks, what is the green shadow on top of the red doji on the eagle? The green shadow, I think you're referring either to the trading band itself or perhaps the logi counter. Now the logi counter, this is a ranging tool, and if you don't have the logi counter installed, it should be in your assortment. I do believe that it comes as part of the DTS package. So just find it. It will be IW DTS logi counter. It's in here somewhere. These are supposed to stack alphabetically. But at any rate, this is it down here, logi counter. And what the logi counter does is it forecasts where this bar will finish. So I know that the high of this bar will be 48.78, the low of this bar will be 48.72. Why is that important? Well, sometimes when a signal is beginning to print before the bar is completely formed, here we'll pretend that this bar is printing a warning dot, and I anticipate a signal to print below it, well, I can use that range as an entry because I know the hash mark will print one tick below the low of that bar. So I think that might be what you're seeing, Lorna, is that logic counter, that range predictor forecaster. It only works on range style bars, so it will work on the mean Renkos, it'll work on a regular Renko, range bars, anything that requires a certain number of ticks to print a certain range. Crude oil almost trying to look a little bit more bullish. Here is why you always want to have a trend before you have a rule of three signal, and why you want a test or a retest of the high. So we've got our three signals against a bullish band, but do we really have a trend? I don't know. Just looking at this chart since yesterday's open, which would have been 6 a.m. Pacific, right around here, it looks to me like this market's pretty much moving sideways at the moment. Yes, we did get a little bit of a rally here, so you may say, well, that's my trend, here's my counter trend. If that's the case, then you need to have your test of the extreme. You could make a case that this was it, but like I said, normally what we see is we see the market retest somewhere between the second and third signals. It's almost like the last gasp of the buyers, their last chance to recover the trend, and then, oh no, we've lost it. So we don't really have those types of things going on in this scenario, and that could be why we're not really seeing the market tail off here at the moment. At the moment, mind you. They may still recover, but it's not a really solid rule of three type setup. I haven't, excuse me, I haven't fleshed it out yet, but I did manage to get a screenshot finally at long last for the eagle, so I can do an eagle cheat sheet. It shows the trend change down here, and we have a very nice rule of three. This is more predictable, more typical. 1, 2, 3 counter trend signals. We've had actually the retest here came between the first and second signal, but we had a subsequent retest and failure between the second and third signal. And that was followed by another trend change signal. Now, normally the trend change develops a little bit earlier. This one fell off rather sharply, and it did so because of the buyers that bought here who were all of a sudden trapped. They found themselves on the wrong side of the trade, so they got out. The buyers who bought here who had more staying power got out right here. They got out at or close to break even. They took a small loss on the trade, and that's what led to the selling for our green bar sell signal. You see, that's how these things work. That's what's going on behind the scenes. We look at these things and, you know, we look for bounces off of the hard edge. Red bar buys, green bar sells. Why? Well, because Eric said so. But what's really going on here? Well, you can look at this chart and you can see the quick decline when we broke the lows. So that tells me that the buyers got fooled. The buyers were trying to buy the market up, and they got stuck on the wrong side of the trade. And you see they tried to buy it up here. They tried to buy it up here. You see all these candles with these wicks on them. They tried to buy it up here, and then they're saying, uh-oh, now we're in trouble. They tried to buy it up here. They got very serious here because you can see they were actually able to finish the bar higher, right? Same thing with the next bar. These bars have tails instead of wicks, and then the sellers knock them down again. So at this point, the strong buyers, the ones that were able to run a deeper stop, are really starting to get concerned. So they're looking now just for a chance to minimize their loss, maybe get out at break even, and then the market starts to rally, starts to flounder, and they say, okay, enough. Let's get out. At least we can minimize our loss a little bit. And then from there, their exit orders, of course, are sell orders. And that's what spurs the market lower still. And this type of cycle happens over and over again. All right, it looks as though we were able to hit our profit objective. I think I'm going to go with the bar high-low, maybe. Nope, I guess not. That would be a little bit too tight, wouldn't it? Maybe the parabolics. Maybe we'll just go to break even for now. have hit our break-even trigger. We've hit our first profit objective. I don't feel much like giving anything back, even though it may result in an early stop out. We'll press the sellers a little bit here. Come on, sellers. Show me what you got. All right. May have caught a little bit of a break. So my objective here is yesterday's gap, which would be around 48.50. Let's see where we are on the support and resistance suite. So 48.56, that would move the market 2 zones. That would be reasonable. 48.56 3/4, that would be a fairly substantial move. Of course, here in the Falcon, we've also got our trend change signal. The trend change signal occurs when the trend line changes color. We have this type of formation. We have this move here that changes the trend line color. Then we see the counter move. This is the buyers trying to get the trend back, but they were only able to do it for about 2 bars, and then the sellers came back and produced a sell signal. That's the trend change signal. That tends to be a pretty high probability signal. You could cover above the median line, you could cover above the swing high. We'll stay with the Raptor trade. Now it looks like we're starting to see a little bit of support here. This being yesterday's low of the morning. And you can see the market kind of rejecting that a little bit, not really wanting to get below there. Perhaps I should go with something more aggressive stop-wise. try to lock in a little bit of that extra profit. There we go. Okay. Come on, Trade Manager. Darn it, I think I need to reset. I had this problem yesterday. All right, I'm going to roll it here. I see the problem. It didn't want to roll. My stops didn't want to roll. I didn't notice that the parabolics had already flipped over. That's what the issue was. I'm thinking, why is my Trade Manager not rolling? Come on, Bears. Get on down there. So obviously we need to see a break of this low. Failure to break is going to send the market higher. Once we do get a breakout there, like I say, there is a little bit of room to move here. We do have that void from yesterday. All right, let's go. Come on. There we go. Okay. So did you see how quickly that broke down through there? That's again because of the buying that was going on there. And the buyer stops. So here come the buyers once again trying to support that position. And with a little bit of luck, no, might end up getting tagged on this one. Come on. A lot of struggle here at this bar. It's going to set the tone, I think. Nope, there we go. Got tagged on a little bit of a reversal, but that's all right. We still got our profit on that and had an opportunity to run it out a little bit. I suppose I could have done a little better just by taking profit on both contracts. But that's always the challenge, is it not? Well, it looks like it's more of what we had yesterday, just a dead market. I'm just going to check the report calendar to see if we're waiting on anything, and I don't see anything really important on the report side of things. All right, here's another first micro-macro cross signal developing. You may be looking at that saying, well, Eric, how in the world is that a first micro-macro cross? The micro and macro lines crossed way, way, way back here. Yes, that's true. However, you need to remember what the first micro-macro cross signal is showing you, namely that you have a market that's gone out of sync and now has come back into sync. So here we have our trend lines have gone out of sync, our bar color out of sync, our filter out of sync. That is a first micro macro cross signal. Problem I'm having with this one is where in the world am I going to cover that trade? It seems too risky to cover it right here above the swing, and yet to place it way, way, way back here seems a little odd as well. All right. What I may try to do, because this is only a single and I'm still looking to fill that gap, is I may try to run this one out. Sometimes with a single contract, I'll attempt that. All right, there we go. Almost. Just getting a little excited there for a moment. Oh, come on. We got the breakout. We know that gap is calling. reaction. I can barely contain myself. All right, a little bit of a rally here. I'm looking for the sellers to come back one more time, after which I think I'm going to get more aggressive with my stops. In fact, I'm even thinking about putting my stops above here. It's so tempting to, yeah, sure, why not? When the market's dragging like this, it's always a difficult call, moving your stop, right? On the one hand, you want to leave your stop far enough away that you don't get tagged on a little reversal, because it's not a loss until you get hit. On the other hand, you don't want to get tagged for any more than is necessary. All right, here come the sellers. Come on, sellers. right, so we've got this macro pullback struggling a little bit of support here off this trend line. Looking hopefully for the market to continue to trickle lower, but trickle is just exactly what it is. Here's a good question about the trade forecaster. Mr. Buckaloo asks, regarding the trade forecaster, when you have a strong trend like this, do you look at the eagle for the proper direction? Well, yes. Unfortunately, the trade forecaster does not give us a direction along with the trend. But yeah, a lot of times I'll look at the eagle. I'll look at all the tools. Of course, the Eagle Trend Trader, designed to pick up trending markets and doing pretty well so far off of that rule of 3 signal or trend change signal, however you chose to interpret it. Almost to our, oh yeah, just hit our profit objective. The thing you need to remember with the trade forecaster is when it reads trend mode, very often you will get a very, very pronounced move like this. I can guarantee you that during this move here, the trade forecaster was reading trend mode. So why, do you ask, is the market just plodding along today? It's not, making a very, very pronounced move like it did through the overnight and part of yesterday. Why is it dragging along? It's supposed to be in trend mode. Well, trend mode actually means 2 things on the trade forecaster. First off, it's anticipating a pronounced move. It doesn't always develop that way. However, the trend mode does suggest that pullbacks will be minimal. So what does that mean? Well, that means that you can probably run a bigger profit target, and because you're anticipating minimal pullbacks, you can probably run a closer stop loss. So rather than set up your trade with your stop above here, as I would habitually do, you may choose to place your stop maybe a little bit tighter so that perhaps you can get in with an additional contract and perhaps double your profitability on the trade. The opposite of that is when the market is in full-on scalp mode. And that, of course, we've seen lots of lately. It would be when the market is, okay, now I'm not going to be able to find you a good example. There we go. When this was going on, the trade forecaster was probably in scalp mode. Does that mean we're not going to get any signals on the eagle? No, not necessarily. The market could still have been in scalp mode when this was developing, or near the end of scalp mode, when we got the trend change signal and this nice little progression higher. However, scalp mode, being the opposite extreme of the trend mode, suggests that the follow-through is going to be restricted and the market swings are going to be greater. So what does that mean? Well, that means when I get my trend change signal here, I'm probably going to run as deep a stop as I can afford, and I'm either going to take profit on target, or maybe I'll even run a closer profit target in anticipation of more violent swings and bigger moves. So the trade forecaster, like I said, has a dual function. It does try to tell you what the current market environment is so that you can better structure your trade. And yes, you can look at the eagle for direction, but you could have got the same direction off of your hawk, right? Nice little first micro macro cross, uh, green bar sell that followed through. Likewise with the falcon. Nice trend change signal, also occurring about the same time. The market tailing off from there. So not a very active morning, but certainly solid signals, which if I had to choose between the two, I'll always take the solid signal over the fast moving market. But yeah, that's a good question. Very good question. While we're on the subject of the trade forecaster, the way the trade forecaster works, excuse me, and the way the trade forecaster works is very similar to the way a weatherman tries to forecast the weather. You know, meteorologists, well, you'd swear sometimes they just look out the window and take a guess. But actually, the whole science has to do with what has happened in the past. You know, they look at things like barometric pressure, humidity, wind speeds, cloud formations. Even here on the West Coast, they'll look at things like tides and currents. And they'll say, okay, the last time these conditions existed, the weather was like this. Therefore, if these conditions exist again, then this is what the weather should be. Well, the trade forecaster does a very similar thing. It looks back in the history of the chart and it says, okay, last time we had these kinds of parameters, this is what the result was. And the result was that we were in trend mode for a very long time. Or the last time these parameters were like this or similar to this, the market was in scalp mode or swing mode, whatever the case may be. No, I'm still here, Lorna. Lorna says, is there no sound? I try to mute my mic when there's nothing going on in case I have a coughing fit or so you don't hear me slurp my drink. Or, I don't know, I try to breathe softly. I hate being in a trading room or a moderated room and it's like an obscene phone call where you just hear the whole time. Yeah, I think you hear a little beep when I hit my mute. But unfortunately, just yeah, very, very quiet session again. This is odd. You know, it's if there was a big report pending or something of that nature, we would expect the market to be this dead. But as near as I can see, there's no real reason for the market to be stuck sideways for so long. Well, I hate to say it, but it's just another sideways day. We'll stay with the market here for probably another 10 minutes or so, but it may lighten up in the afternoon. But right now, it's not really looking like much of a trading day. Good time to get caught up on emails and I could pull up my guitar, play a little tune for you. That might be a little torture. Maybe even a little more torture than the slow market. Well, we did get the one trade early on, but really nothing since then. Well, it's true we have a possible first micro macro cross here on the hawk. Yet another one. We don't tend to see these develop all that often. So I'm a little reluctant to, throw one first micro macro cross after the next, although this one did hit its profit objective, didn't it? The one that I pointed out earlier, I tried to run out unsuccessfully. It did hit its profit target reverse. So we are getting another opportunity out of first micro macro cross. You probably would want to cover it above the highs. It's kind of trade. All right, I might try it, but I don't think I'm going to go in for the full amount. I just switched to manual mode. Manual mode, of course, defaults to this quantity up here. So by clicking on your risk percent mode, you can change it to manual. That disables the percentage model, by the way. So you need to be careful what your position size will be. Usually I just do it for a single contract. Okay, and that has since moved into yellow bars, so we'll cancel that, and I think that's going to be enough action for today. Honestly, folks, I can't see this market really going anywhere. It will probably continue to plod lower. It might be the kind of trade where you take a signal, go have breakfast, come back, check it in half an hour, go weed the garden, come back, check it again. It could very well take all day to play out. The current bias does seem to be lower, and I can't help but think that that opening gap from yesterday is still going to be calling to the market. But there's no point in hanging out. It's painfully slow. And like I said, if you're going to take this type of play, you really need to just place an order, give it a wide berth, and go do something else. And hopefully Monday will be a better session. But let's call it an early week. And I will see you all again on Monday. I hope you have a wonderful weekend. And we'll talk to you soon. Bye for now.